Hey guys, welcome back to the channel. Before we get started, I have to hit you with this quick disclaimer to appease those YouTube gods. This video is for entertainment purposes only, not financial advice. You should always consult a professional. With that out of the way, guys, let's get into the video. Hey guys, welcome back to the channel. We have a very exciting episode for you guys. Today I am joined by the Victor Crooks from the Discord community Invest Tribe. All right, he is a proclaimed investor, a speculator, a trader, a honey collector, which I find fascinating because he has posted pictures of honey in the community. He's a man of leisure, which I definitely agree with. He invests primarily in speculative commodities. All right, so that might be something a lot of you high yielders might be interested in, especially if you're thinking about kind of a diversification strategy. He also invests in royalties. All right, particularly metals and energy, with a focus on single stocks and ethical investing. So the Victor Crooks, welcome to this podcast, this episode. Again, this will just be a conversation where you get to tell us all about your investing style. So I'll let you have it and tell us a little bit about yourself. We'll get you started and then we'll get right into it.
All right, well, thank you, Yuj, for having me. And just to get diving right in, I think that there's a big disparity how a lot of Americans have their finances set up according to the rest of the world. There is a massive amount of gold influx going into these other countries, and the average portfolio, I believe, has less than 1% of their allocation to precious metals. And I am much more along the lines of it should be about 10 times that. So that's only talking about 10% of your portfolio for the average investor to be able to really put a floor in for where your protection for your savings is. So many people have money at risk, and there's so much risk on out there. And I think the marketplace being where it's at currently has a lot of downside potential. And so if people don't have, unfortunately, the word hedge gets thrown around there a lot. But if they don't have their stuff hedged properly, where they have uncorrelated risk assets, they're asking for, whenever the market goes, that they're really going to see it. It's kind of a live by the sword, die by the sword thing. If you're counting on the Mag 7 to be able to keep your portfolio afloat, if something goes like that, then, well, the whole market kind of goes with that if you don't have anything in your back pocket.
Yeah, that's so true. I mean, like just recently, right before the Jerome Powell speech at Jackson Hole, we look like we're going to go into the crapper, like we're going to go down the toilet. So I think this video is going to be very timely for a lot of people. And you bring up a lot of good points too, because, gold right now is sitting as one of the best assets year to date, sitting at 28%, for a return year to date. Silver at 34%, the S&P 500, a very disgusting 10% year to date. VNQ, which is, the Vanguard Real Estate Index, 3.48%. And then we have Bitcoin coming in at 24.88% year to date. So gold and silver absolutely dominating. So, let's get to it. Let's just get straight into it. Why, should investors even consider this? We're talking like, this is typically a high yield investing channel. We talk about distribution income and stuff like that. We kind of get lost in the sauce. We see all these dollar signs and yields and things like that. But come on, man, like, why should I, as an investor, consider gold or commodities? Like, let's just get right into it.
Well, I'd say gold specifically has been a store of value since before the Bible. So it's existed for longer than the market has, longer than Bitcoin has. So if you want to talk about track record, it has never strayed away from being a store of value. It's always been seen as that. Whereas, say, silver, for example, is a completely separate situation, and it's being looked at as much more of an industrial metal than a precious metal these days. But that doesn't mean the demand's not there, that the drivers aren't there, because for any of the solar panel electrification type stuff, there is still a very big call for that.
Yeah. So why should, investors even consider, gold, metals for, their portfolio? Like, we're always looking at dollar signs, distribution rates, high yields. Why should we even look at these old man investments, right? What's so exciting about these things?
I don't know if they are exciting. I don't think investing should necessarily be exciting. If you're getting your thrill from investing, I think that you tend to be more of a gambler, and that ends up into degenerate habits where you go, hey, let's, bet all. I mean, you'd be luckier if you actually just went to a casino and bet on red. Your chances be much higher than trying to gamble in the stock market. So I try to go for things that are boring, things that if it's I also like to focus on sectors that aren't talked about. If it's boring or if it's hated, I'm a really big fan of, just to throw out a few other names out there, Doomberg, Rick Roll, just some of the ideology and how that fits into with how I like to invest. There's a whole, not to plug other people's channels or anything like that, but just there's plenty of resources out there if people want to invest in more sound, what I consider sound investments. So of course, uncorrelated risk assets and gold, and there's plenty of other ones, whether you want to do alcohol, real estate, there's a whole list of things if you wanted to get into wine investing, or just ways of really saying, yeah, you make tons of gains, but don't you want to hold on to those? Don't you want those to be long-term gains, not you just turn around and go, oops, well, I handed it back the next day because Powell said something or Trump said something or whatever it is. If things are that able to be emotional in the marketplace, it's like the marketplace is bipolar, and immediately after bad news, the dip gets bought up. You're talking about this whipsaw action back and forth, and I don't have the time or energy to be sitting in front of a screen all day and going, I mean, I already do way too much of that. So to try and think I'm going to do that much more to be active portfolio management is like risk reward. Is the juice worth squeeze?
Yeah.
And
So what are you like your top, holdings right now? Let's say 3 or 5. Right. What are your top 3 to 5 holdings?
Let's see. I recently just did take a much larger position in some of the micro cap stocks, but I don't really want to say necessarily those names. I don't want to be for people to be like, hey, you're trying to pump whatever these are, because you can do that with micro caps. There are investors out there who got $50 million or whatever, and they're like, well, let's watch the price double overnight, and then anybody else who sees that buys in, and they end up being a bag holder, right? So I try and shy away from doing that. And a lot in the mining sector actually is in that. There are plenty in the junior mining, and there are plenty in even the mid-tier miners where they're not really getting over that $2 billion market cap. And so there's definitely more risk on if you're talking about, where your investments are. There's safer plays if you want, like, bigger miners. Of course, I touched on royalty companies. There are quite a few royalty companies that I have. In terms of largest positions, I actually really don't know all of them off the top of my head because I have 3 different portfolios I go over. There's a retirement portfolio. There is a ETF of my own creation because I said, why bother paying the expense ratio? I can go ahead and see all the ETFs and what they carry in them. Why not just go ahead and do my own? I'll pay myself the expense ratio. Thank you. Good job, me. You're a great fund manager. So
nice. So like, not to cut you off, but as far as like gold, commodities, royalty, like these other, assets that aren't traditionally in most investors, portfolio. Like, I mean, if you just I could tell from most of either my audience or, people I've spoken to that we're not thinking about gold. We're not thinking about silver. We're not thinking about oil. We're not thinking about, I remember you called out lithium some time ago. We're not thinking about these other investment things, these other investment asset classes. So, speak more to that, like as far as your portfolio, like what are you interested in? What are you like going heavy in? You don't have to mention any of the tickers because, the micro cap thing, but, like talk about that.
Well, so the whole, in terms of touching on each of the little bits, like royalties, for example, royalties have been around for a long time in the oil and gas industry, and then that was adopted more by the gold industry. So royalty and streaming services, the part that I like about them is that they have a heck of a lot less risk. If you're a mining company, and let's say you don't own a bunch of mines, because there's all sorts, the larger ones, Agnico Eagle, for example, they own tons of mines. So they have a diversified risk asset to their portfolio. And there are other ones, though, that are single asset, which is a much higher risk tolerance that you have to have for those kind of a thing. Pretty heavy. I mean, it's probably, especially with some of the run up that has happened in some of those particular stocks, that now the weighting is more like 30%. It was more of around 20%. That is, though, based upon going over the Department of Defense critical minerals list and saying, what are all the things that these government agencies say that we're completely lacking, whether it's tungsten, whether it's zinc, whether it's just antimony, all of these things. I mean, if you look up 500 ounces in silver inside of a warhead and look at how many missiles have been launched around recently, that's a lot of silver being spent. And there are very few pure silver plays, meaning most of the silver is derived from a copper and silver mining play or a copper gold play, and silver is part of those tailings, because silver worth dollar for dollar isn't worth the time for a lot of these miners to be able to go ahead and try and pay for the diesel, pay for the machinery, drill it out of the ground, and then you go, here's $38 an ounce. They go, why the hell would we do that? We could mine gold. That's 3,600 an ounce.
I freaking love this vein that we just went down of
Vein's
like
a great choice of words for it.
of national defense and investing, right? Because we're talking about, you know, silver being used for missiles. We're talking about precious or other metals being used, you know, magnets and stuff like that. I think that could be like a really good vein to go down. So how
sure, that's
is that something you want to talk about? Like something real, like you really like to talk about?
It is a subject that fascinates me greatly, just because it treads a very fine line when you start to talk about ethical investing, and then you mention facts like, hey, there's this many ounces of silver in a missile, and people start to go, well, then if you know full well that silver is being mined and it's being put into missiles, then how ethical are you for investing in this silver mining company? Kind of a thing. Very much so the same point people make with Palantir, being like, hey, you can use Palantir for very horrifically bad things and, you know, whatever. And I'm like, well, that even has its own flip side to the coin, where if you do the Hiroshima, Nagasaki, people tend to all of a sudden calm it down. So if you have that overwhelming force, maybe Palantir is a good thing. That's a whole nother argument in and of itself. Whereas there are plenty of other companies now, like I believe Walgreens is one that decided to go private because they saw what Palantir did. They saw how it would affect their balance sheet and goes, yes, this is a no-brainer kind of a thing. So I don't really understand how Palantir's works. And I'm guessing that's part of the reason why they're so successful is they've managed to keep their stuff proprietary and not have a whole lot of looky-loos be able to come in and copy their stuff. But yeah, the ethical investing side of it, getting into Department of Defense type stuff. We're in a drought of mine stuff. We haven't had mines go along, mines get approved. It's been an entire quagmire for this country for a very long time period. It's been frowned upon, which is another thing in terms of investing. I definitely like areas that get people emotional for whatever reason, because that means that people are going to be doing things that are not in accordance with how the market is reflecting, kind of a thing. People go, oh, I hate uranium, nuclear is bad, you know, we don't want more nuclear power plants. Good. The fact that you don't like it means that now I kind of do like it. So it's so many of those little bits and pieces to try and look at, which is kind of what I was alluding to earlier of like, man, there's so much stuff in. If you just want to go on zinc for the Department of Defense, or lead, or all of these other critical lists of things that we're drastically underperforming in, whether we have it or we don't even have the stuff to mine it. If you take gallium, for example, that we don't even do bauxite production. Like, we don't mine bauxite. So how the heck are we going to get the next thing that we need? And if I remember correctly, gallium is used in certain types of guidance systems and other things of certain types of capacitors or semiconductors that are, you know, well, if we're going to want to be on the leading edge, if you have to be the best at technology to maintain your position leading in the world, then you're going to have dominance in tech. And if that dominance in tech means, hey, this next semiconductor is going to be the bee's knees, these gallium semiconductors are just going to stomp whatever the silicone guys are putting out here, or whether graphene or one of these next things, you have to be able to then be the domineering force in that. So the U.S. is going to have to get on that.
That is so freaking cool. Like, see, that is the way that investors need to look at stuff, right? Because you went down the entire list. You were just talking about like Palantir, artificial intelligence, AI. Then you can almost put in NVIDIA as a layer below them, and then you look a layer below them, and you have Supermicro, SMCI. Then you have the data centers, you have CoreWeave, and now you're roping in the actual metals that actually make up these circuits and motherboards. And the missiles that freaking Palantir, unfortunately, what side you're on, is helping guide, right? Helping guide this missile to its target. And in that missile, aside from all the circuitry, all the copper, all the metal, you have silver, you have gallium, you have, man, that is so crazy. See, this is the type of stuff that isn't talked enough about. Is this this type of way of thinking when you're looking at investing, looking layers deep into basically getting down to the metal, getting down to the rock, to put your investment in. And I mean, looking at this from a macro geopolitical thing, you also have again China, U.S. beefing over magnets, and now the U.S. is like, what, we're just going to mine our own damn magnets at this point. So right there is an opportunity to invest in something, right? So I think that is fascinating the way you kind of laid this whole thing out. So that is really, really cool. Okay. So like what has been one of your, like your philosophy towards investing in these things? Like, like how do you, I guess, look at making an investment into like a commodity or a metal or something? Can you walk us through that? Can you walk me through that?
Oh yeah, that's it's really nuanced because it applies differently to each part of it. Because you're not going to look at junior miners the same way you're going to look at the seniors or even royalty companies or just on down the line. Simply because a lot of those are pre-revenue companies, and I mean, you want to talk about gambling, roll of the dice. 90% of those are something fail, but the ones that do hit are a lottery ticket, and so it kind of more, I suppose, barbell is what people would call it for the style of investing. So in terms of like, yeah, I've got NVIDIA in terms of safe bet stuff of where you want, and I've got my gold, and I've got the other things that are going to be okay. And I don't have really a whole lot of gold in the paper ETFs like GLD. If anything, I have stuff backed up by actual physical gold. That's a very important thing to me. If you don't hold it, you don't own it kind of mentality. A lot of people are unfamiliar with like full tear ups or partial tear ups of what can happen in the gold or in the metals marketplace. Like if it gets too squirrely, and there are times when silver or gold are 200 or 300 to 1 for, so 300 people show up wanting that ounce of gold, that's going to be a problem. So is this why you don't like, is this why, and I don't mean to cut you off, but is this why you don't like the gold ETFs or the silver ETFs that you would opt for, like actually holding the physical asset? Yeah, there's plenty of money to be made in it. I'm not trying to knock it for the marketplace, but there are, to me, way too many issues for me to feel comfortable putting my money there. I'm not saying other people can't do it, but JP Morgan was found guilty of fraud, right? They ended up paying, I think it was somewhere along the order of $920 million or $980 million because from 2008 to 2016, they were found guilty of manipulating the silver marketplace. So if somebody is done that for more or less a decade before they got caught, or at least for what we know of, and they also have half of the marketplace. They literally, half of the silver there belongs to JP Morgan. So when somebody were to want to come to COMEX, if JP Morgan goes, no, we're just going to pull our metal out of there, everybody goes, oh no, there's a shortage of silver over here. Everybody quickly buy as much as you can. JP Morgan goes, actually, we're back, and here's our half of that silver. So everything you all just bought, you're all bag holders now because the price just went down by half because we just brought it all back in. So that level, now I'm not saying they're readily doing that, but there's so much of that going on. I would feel much more comfortable having a base where it's like, okay, if you touch it, you own it, or at least how close can you get to that level of security? Because I really am, as soon as it's out of your hands, it's at risk.
That is crazy. You know, like I always kind of found myself stuck in this thing. Like, I want to hear your thoughts. I've always found myself stuck in this quagmire, I guess. It's like I could have the gold ETF, GLD, right? That's my gold exposure. And I just throw money in there and call it a day. You know, let's forget about tax problems right now. Let's just say I throw money in the gold, it goes up. Yay, yeah, I could sell it in the future. It's a hedge, you know, quote unquote. But the other side of me is like, I don't trust paper gold, as it's known as, right? I would rather hold physical gold, you know, like chains and bracelets and actual, you know, gold little nuggets or bars, whatever they called. But I have been told, and I want to hear your thoughts on this, that the transaction cost is way higher on physical gold. Like, you can't just, you know, like let's say you needed I don't know, to sell some gold bars. Like, you're gonna get ripped off if you go to a broker, right? They're gonna just try to take more money from you. I mean, can you speak to that? You know, how hard is it to sell gold?
Sure. That's a little bit different of a situation if you're talking going down to your local coin shop and saying, "Hey, I want to sell this gold to you." They have to be able to make money off of it. So the premium of where they're going to be able to say, "Hey, we're going to give you this much under spot," whatever the spot price is, and they update it every half hour or so to, you know, the futures markets or whatever whatever the spot price is, to be able to say, hey, this is what we're going to pay for it right now. It doesn't do them any good to pay you what currently it's worth, and then say tomorrow peace comes. Say, hey, Trump actually says, well, we solved the whole thing. The whole thing doesn't matter. Middle East done. Europe done. We solved it all. So then it's peace everywhere, and gold would plummet in value because then you've got the currency that everybody's trading in, right? The dollar, the fiat, is comfortable for another decade or so before we have to really talk about, hey, fiat's whole design is to go to zero. You know,
Oh man, there's so much to
it's a
unpack
flawed
right there.
system.
Yeah, there's so much to unpack right there, because you're talking not only, you know, dollar devaluing, you know, your monetary policy. I mean, we just heard that the Fed's going to be cutting, hopefully, interest rates in September. But you're also talking about, you know, like a risk environment, you know, and right now in the world, risk is up because, I mean, gold is doing really well. I mean, you know, so how do you look at like allocation side? Like, if you had like $100,000 today, right? And you need to split it up between, you know, stock market, I don't know, real estate, and some gold bars. Like, what is your thinking in today's environment because of what's going on? You know, walk me through that. Like, if I wanted to buy some gold bars, like, how should I look at it? You know, should I just get just a little bit? Should I put, you know, half my net worth in it? Should I put 10% of my net worth? You know, walk me through that kind of line of thinking.
I guess there's so many factors too of what your decision would make in me, because I mean, you gave the 100,000, right? So use that as a benchmark of is that your total net worth then? Is that like saying, hey man, I've got $100,000, how should I invest it? Or you're like, no, I've got $100,000 I can lose, because there's so many people who are like, no, my net worth is $1 million, and then they realize, well, no, I actually can't risk all of that. There's so much of that that's spoken for. So they end up doing, horrible calculations in their head and putting themselves way more at risk than they originally intended. Because they think, oh, no, I got my house. I can just refi that. Or I can just, all of these things that are left on intangibles, right? So my whole goal is to shoot as many holes in my theory as possible wherever I'm investing, and say, okay, what still sticks? And if there's something that just is sitting up there like, titanium, it's just like, man, everything bounced off me like body armor, then that's, the generally like go full steam with that one, or as much as you feel like allocating. Anybody like Warren Buffett will say, man, don't ever go full port, right? Don't ever go more than half into a position. So just of whatever allocations. Currently, gold is traded sideways for about the past 5 months. So in terms of when might be a time to allocate, I'd say now, because the most likely of what again, there's so much to it. I'd say a really good way to kind of get a idea of it is to look up David Stockman and Rick Rule in the conversation they have on where this country's going in terms of finances, how we haven't dealt with our national debt at all. We are doing this weird mafioso way of controlling the world, whether we're bashing these other economies or whether we're just making it so we more or less don't have to prop ourselves up if we keep everybody else under thumb and getting what we need. You know, the Congo being one of those examples that we've talked about of just why are we taking natural resources just because we brokered peace? You know, it's so many of these ways to look at, you know, okay, well, if they're going to print off more dollars, what's that going to do to the price of gold if you own gold? It will only in nominal value go up whatever they print off. And the only ways I see, I mean, there's multiple ways of doing it. If you ask Brock or something, they'll say, hey, the likelihood of gold revaluation happening is very low. Doesn't mean it couldn't happen though. So gold is valued, I believe, from the Fed at around $35, $45 per ounce. But on an open market, I don't know what the price is today, but 3,300, 3,400, somewhere around there for whatever today's price is. If they decide to do that, then that means everything that we're holding in the vault, including all of these other countries' gold, like Germany, of just being able to say, well, we're not handing that back at the moment, then all of a sudden it looks like we're not in a national debt anymore. We're in a national surplus. And that just whenever you have somebody saying he who owns the gold controls the world, you know, the president's tweeting out stuff like that. They're doing stuff like they won't audit Fort Knox or they won't do it publicly. Like there's so many bits and pieces that go, they throw up red flags. And as soon as you see enough of those, you go, well, then where do I actually, if I do want to be out there, I do want to be at risk, I do want to generate income, how do I do that in a way that doesn't leave me feeling like I'm going to be regretting it the next day? And to me right now, having some allocation into just buying physical gold, if you want to go do that, yes, there is a premium that you would be paying. You do kind of get that premium back, depending upon also where the gold marketplace is. Because if gold's not super active, it might be a lot higher of a premium. But if gold's selling at all-time high, it's much harder for them to be able to think they can charge $100 premium on, you know, a gold eagle.
You talked about, you know, the Fed printing a bunch of dollars. Don't worry about your dog. You have the Fed printing off a bunch of dollars, right? People are worried that the dollar, the US dollar, is getting devalued, which it is. I mean, it absolutely is. I mean, a dollar today is not what a dollar used to be worth way back when. You know, so how, I guess, speak to that part of like how someone should be looking at monetary policy today. Like, what is your thesis on monetary policy? Because mine is that we're going to print so much money. This will be a headwind for real estate. This will be a headwind, or not a headwind, excuse me. This will be a tailwind for real estate. This will be a tailwind for gold. This will be a tailwind for, you know, crypto, for Bitcoin, right? Because just so much dollars are going to be entering this system. So I guess speak to your thesis on this. Like, why is gold so interesting? You know, why is this an asset class aside from the, you know, uncorrelated, you know, diversification hedge type of thing? Like what else is there?
Let me put it like this then, because this is the way I've seen it, and I think I've posted a few little things similar to it. But 20 gold coins will buy you a nice SUV today. 20 gold coins would have bought you a nice SUV 20 years ago, and it will buy you a nice SUV 20 years from now. Whereas your $6,000 from 20 years ago or $10,000 from 20 years ago will not buy you a nice SUV today. A nice SUV today is going to be more like $60,000. And I think 20 years from now, it's also going to go up in price. So what does that tell you? Well, you went from 10,000, in this example, you go from 10,000 to 60 to far beyond. That means I need a lot more dollars. Whereas if I had just held on to that gold, it's the same all the way through. You're putting a floor in for your savings. And so many of these people see their stuff crash to zero. I'd rather, if I see something go, oh, wow, that really hurt. Thank goodness I have this in my back pocket. Thank goodness, you know, And if you want to talk about, again, uncorrelated risk, things like, a nice bottle of scotch, if things do actually hit the fan, then you have something where you can at least drown your sorrows in if you can't sell it, if all money's worth nothing. If we're all trading in Zimbabwe dollars at that point, then Zimbabwe $1 trillion, it's
Yeah.
not going to matter. What's going to matter is guns, gold, and grub in that order, probably. It's because if you got a gun, you can get gold and grub.
Yep. Yep.
But if you don't have a gun or you don't have gold, you're probably not getting grub. And if you only got grub, good luck getting the gold and the gun. That's a weird trade to me. I'll give you my sandwiches for your gun. They just go, no, just give me your sandwiches.
That is every time people talk about gold, because like I grew up, grew up on like the Robert Kiyosaki's of the world, like, oh, the gold is going to be guns, guns, bullets, and gold, right? So I mean, like, every time people talk about gold, I instantly think like Doom Prepper, like this is really what they are. The guy is like burying his gold in like, a map that's only he knows, right? So I mean, like, is there some validity to this way of thinking of people who buy gold, or is it just, like, no, it's an investment, like, there's a thesis behind it, that it's never going to get devalued, right? Like, I guess, like, I don't know what I'm trying to say. I guess I'm trying to,
Well, there's absolutely a thesis for me. It's not just, there's the conspiracy theory part of my brain of being like, well, what happens when stuff does hit the fan? Because people will need a monetary system of goods and services to be able to exchange. The barter system really doesn't work out too well, of being like, hey, I got a broken arm and I'll give you 50 chickens if you fix my broken, eventually there's a breakdown. And so again, something that is a store of value, gold's been that for a while now. And we can pretty much agree anywhere we go in the world, 24 karat gold is going to be X amount over here and over here. And that's the part I like about so much of it, is that you can test it, you can verify it. It's not actually that hard to do, to be able to say, okay, what you have here, like, granted, it would be a pain in the butt. You try and go to, your 7-Eleven and buy, I want a slushie. Let me break this piece of silver up into pieces of 8. Here you go. And now here's your change back and all this. However, it definitely works as a form of monetary exchange. So yeah, what do you do when fiat hits zero, when money goes to nothing, if that is the case? I'm not saying it is. However, I like to let's look at all the countries that have increased their gold and how much they've increased it by. Like, you can look at of the top 15 countries, I think I wrote it down over here: China, India, Turkey, Poland. Just, there are so many countries out there that are more than fine going, we're going to increase our gold reserves. So if BRICS goes through and if all this other stuff is successful, we might just go ahead and sidestep the US. We might not have to deal with your system. Instead, we're going to go ahead and at least still maybe trade in fiat, but all of that money is getting reinvested back into gold. That's what I've seen. When you see where the coffers are going for these countries, for these independent like wealth funds, you'll see there's so much of a percentage going to gold. To me, it's like, where's the big money going? Why not just follow the whales instead of trying to have retail marketplace be able to make waves? I always think it's funny when I see, granted, some of the smaller cap stuff is a different story, but someone's like, you're just pumping NVIDIA to get it. It's like, dude, I can't pump NVIDIA. That's a $4 trillion stock. What are you smoking on? Send it this way, because it's got to be good if you think that I'm actually going to be effective on Reddit by, going, hey, NVIDIA did good today, or whatever.
So what do you think about, because I always find this argument, I typically find this argument, maybe there's no argument, I don't know, but what about the Bitcoin maxis out there that are like, no, gold is dead, we're not going back to gold, it's going to be the Bitcoin standard in the future, everyone's going to be using Bitcoin as the world reserve currency, that's the way we're headed, it's digital gold, right? Like, gold is a thing of the past. So what do you say to this? What is your viewpoints on this?
You just hit it on the head. It's so funny how it is in our language. It is as good as gold. It is digital gold. When you use that as your metric, I think that is also one of the funny points, is that so few people seem to realize, like, all of these other foreign currencies, they all trade to the dollar. It's the yen to the dollar, the yuan to the dollar, whatever it is to the dollar. but then it's dollar to gold. It's not the other way around. When you say it, it's how much is the dollar to gold. It's not how much of gold ounces do you need to buy a dollar. So where the denominator is in that equation, people seem to continue to miss. It's like, well, we're not, as much as people are like, no, Nixon took us off the gold standard. We're not done. We're not by that anymore. It's like, you have no idea how incorrect that is, even though on paper we're not tied to gold. To act like it is a totally separate monetary entity, I think is beyond foolish. And so that's why people should have more in their portfolio. Store value, yeah, it could go back down. Yeah, it could be peace. But do you see that in the macro? I don't see less wars happening. I don't see all of a sudden giant peace treaties being reached. So gold does good in times of uncertainty. Will it go up more? Maybe. I think more than likely it is doing a long rest period, and then it will see another shoot off. It could definitely by the end of the year. I'm not saying it will, but there's the possibility of it going to 4 or 5 within a very short time period, as it just did, and then it's having this consolidation time. So whether or not it's a good time to get in and buy gold, you're very familiar with the saying, well, it'll do something. It could go up, it could go down, you know. So yes, where would I say to put it? I think there's a lot more benefit, though, to putting your money in miners right now in the mergers and acquisitions space. I mean, Warren Buffett made a ton of money in mergers and acquisitions, of being able to see a company, see it had good value on the fundamental side of it, and go, somebody's going to snap this up. Somebody's going to buy this out. Therefore, we want to capture whatever those gains are before somebody else does. And that's just a matter of looking at the books. So few people know how to look at fundamentals for a company, and I even get schooled on this stuff like almost on a daily. I'm talking to my dad, and he's like, "Well, what about this particular thing?" And that means if they're using funds out of these assets, that's going to lead to less of their return on asset in the books. And I'm like, "Oh, okay, yeah, that's a good point," kind of a thing. So, but so few. If you can't analyze a company, then you're just betting on hope. It's just a giant dose of hopium, and so much of our market is in that. Like, I think the average retail investor takes about 6 minutes to decide whether or not they're going to buy a stock, and that's not nearly enough time. So many people don't want to spend the time, and they don't know what kind of investor they even are. They don't know if they're an investor, if they're a speculator. They call themselves an investor, and I'm like, really? What's your timeline? They're like, maybe 6 months. I'm like, that's speculation. That's not investing.
Yeah,
so
that's a fact. Yeah, I'm just agreeing with you. That's a fact. There's so many investors that, like we see it all the time. And I mean, this isn't to bash anybody, but people will always ask the question, is this a good stock to buy? Right? Like, that's the most that's not the question you should be asking, right? That is the wrong question to be asking. So I'm glad you brought that up, because, so many investors, and myself included, when I started out, I didn't know, right? And I was like, is this a good stock? Like, or I don't know, and of course I made the wrong decision. But that is funny. Like, you're right. You're 100% right. Like, there's so many investors that don't know how to at least do fundamental, at least look at the investor presentation at a bare minimum, but for gold miners, specifically, because I know they're the small caps, but I guess for like in the bio space, the biomedical space, you'll have like these micro biomedicals just shoot up like crazy.
Oh yeah.
Right.
Yeah.
And then
I invest in some of those too, because you want to talk about a niche market. There's so few of competitors. So where's your edge? Where's your alpha? If we are looking at investing, I think the average investor in a lot of these Discord groups or on YouTube need to just take a step back and take a month and all the time that they would be spending in front of the screen, in front of Robinhood or whatever, to just really actually take a couple of books and dive into these different theories of investing. Because some of the stuff Ben Graham says might not apply to certain market types today for value investing, but then again, it might. And then again, there's, take Lynch, take whoever you want to, of these big time investors and how they've been super successful. But unless you review those people, you're not going to have what it takes to be able to think about it. As you were just saying, is like, hey, you made those. I also made those mistakes. We're all ignorant until we're not. But why put your money on the table when you don't know what the offer is? It's the Family Guy, what could be in the box? Oh, it could be the boat. Oh, it could be a boat in the box, though. It's the mystery box. It's like, yeah, or you could just have the boat. Yeah, but it's a mystery, and there's so much of investing that happens like that. And I get it doesn't dishearten me too much to see people lose that money, but I just hope that that is the small price that they pay rather than all of what you can see on Reddit of Wall Street bets or whatever, and people just like, here's $1 million down the tube, and I'm like, I hope this is fake. I hope they're just doing it for karma farming as opposed to actually this person just lost their life savings.
Yeah, I see those posts all the time. And it's funny, like way back when I was doing the stream, they used to have a segment called Wall Street Blogging. But yeah, I stopped those. You're right, so you're right, there's the old traditional type of investor, the Ben Graham style value investing. You have myself, I'm more of like a story-driven investor. I'll look at the fundamentals, I'll look at the investor presentation, I'll look at the financials, and then look kind of like a little bit beyond that. But I always like the qualitative, analysis of a company. Like, what's the story? Who's the founder? What's so exciting about them? What's so great about this company, right? And then that's usually, and I hate to say it, but that's how I do most of my investing.
That's so many people though love a good story. That's how junior miners get people hooked, is they're like, hey man, look at gold. And then other people who are gold bugs or silver bug or whatever it is that they're throwing out there as they're casting their line, trying to get their bait. And it's just like, oh, well, how much gold though? And that's why I think it helps. Again, I was like, why people should take a step back, actually take some real investing stuff. I like Rick Rule for that, of at least when I'm looking at, if somebody were to want to get into natural resource investing, whether it be water or energy or, whatever particular background that it is, because then you'll have a solid foundation. You'll really have a base. You'll have a floor to be able to build from, as opposed to trying to build castles on sand.
Yep.
Because that's what so many people are. Well, look at this ETF and it's made a lot of money, and look at the returns over here. Look at all this, blinded by the dollar signs. And it ends up being a huge detriment because they don't know when they got in. They don't know why they got in. Their conviction is gone by the time that it's in 30, 40, whatever negative percent. And then they end up selling. And the time actually, when it got down to that negative 40% or 50% or whatever it is that caused them to, get out of it, might have been the time where it was actually getting interesting to get back into it, or to maybe buy in and say, hey, now is where you're going to see that gain. Yeah, you had that big dip, but Buffett talks about all the time. You're not, or both him and Munger, if you can't see a 40% drop in your stock, and especially goes in the mining section of what could be even a day or a week or something, then I wouldn't get involved in it if I were you, unless you go with some of the larger ones, the multi-$10 billion whatever, Franco Nevada, Agnico Eagle, like bigger names than that, where you don't have to worry.
So you're saying Ulti is not a good investment then?
I never said that. I would never do that. I've always said J checks or paychecks. So just count on your almighty Jay Pestrelli to bail you out when Tesla and Ulti and just start naming down the list. No, I'm not a fan of yield max. I'm not a fan of a lot of the high income stuff, just because even in the naming of it, again, it's high income. It could just be said these are income funds and these ones do better than others. It's putting out words or buzzwords to attract you. All of this should be income funds. Why else would we be in the damn stock market? It's like all of these should provide income. No, this is a negative income fund. Oh shit, I don't want to buy that one. So it's like,
oh, that is good. A negative income fund. That is gold. See, that was good. See, I like that. Yep. But yeah, you're like in the discords, in the community, like I know that you don't really mess with these instruments. You're usually like doing the real investing stuff, right? Like that's the stuff we don't talk about, right? You're doing the real investing stuff. You're talking about, oh, I like this miner because of AYG.
I can pretend really well.
Yeah, and it's funny. Like most of the stuff you post has done actually pretty well, right? You're known in the Discord as the guy that calls metals, and usually they your long-term thesis does play out really well. So I just appreciate that fact. Like I appreciate that. you're a real investor. Like you actually know the companies you're investing into.
I bring receipts. I'm like, hey guys, here's my post from 3 months ago about antimony here. Hey, here's this company. Hey, look what they're doing. They're getting a foundering, and the government, Uncle Sam is the backer for the back pocket. So whether you're MP Materials, whether you're, any of these, they are, the most recent ones that stood to gain from Apple and the government investing in them. But there's a lot more to come. I don't want to, again, be throwing a bunch of names out there, but if they go in the Discord, they'll see them. Like I throw around those plenty of like, hey, what about for just for example, Perpetua Resources or United Antimony or just some of the companies where I like, we're short this. Where do we get it? We don't want to get it from outside the US. How do we get it here then? Who are the ones that produce it? Who are the best? Who are the best in class? And you just end up, it narrows it down a lot for you. And then you can even, you want to be simple about it, go to the ETFs and then just see what the biggest picks are and then just try to select the best of the best that way. If you really don't want to spend your time doing due diligence, and most people don't, I think that's where investors fall apart, is they don't have the time. I'm in a luxury where I have probably more free time than the average person. Therefore, I can spend gobs and gobs of time to be able to try and get into this stuff. But I don't even know if that juice is worth the squeeze. I'm even kind of backtracking on some of the stuff that I'm doing and going, well, what am I standing to gain from this? Because I need a tenfold gain out of this. If I'm going to be spending hours of time researching, hours of time to be able to say whether or not either Tesla would be good for leaps a year down the road, or whether, just of whatever for options or any of these other potentials.
Yeah. Man, I could drone on with you for hours, dude. But just to be respectful of the audience's time, man, let's wrap this up. I do have a couple questions for you though. I do have
Okay.
and I learned a lot today. So I, first off, thank you for sharing, kind of your own insights and your own perspectives, because I think that is absolutely invaluable. Because just as investors, there's 100 ways to do things. A lot of ways are the wrong way, but so I think the more we share our perspectives and insights, the better investors we can be. But I have a couple questions for you. First question is, if you can go back in time and talk to your former self, let's say 5 years ago, 10 years ago, whatever it is, what would you tell your former self?
Well, yeah, I mean, there's obvious jokes there of like, buy Facebook or, just buy just whatever of all those kinds of things. But it would have been to start early. Lynch, his whole thing, it's about time in the market, not timing the market. And then find out, again, who you are. Who are you as a type of investor? Are you somebody who doesn't like a lot of risk? Are you somebody who, what's your timeline look like? There's the whole 60-40 portfolio. As you get older, you want to be 100%. Now, I'm not saying there's even any credence to that, but everybody's got everyone's their own unique snowflake, right? So you can't say these are hard and fast to investing. You have to do this. The only ones that make sense to me are Warren Buffett and don't lose, right? What's the number one rule? Don't lose. Yeah. Okay, that's a hard and fast. That one, you just stick to that one. But all these other ones are so fluid and dynamic that try and say, hey, well, when this does this, you should react this way. And then there's almost always an exception to that in the rule. So awesome. Know who you are as an investor, know what you want to get involved in. And then if you are you a momentum investor? Are you trying to chase this, or just that's probably in terms of best way I could go about looking at it for my younger self, is just be like, hey man, get involved and figure out where your alpha is, figure out where you want to position yourself, where you feel comfortable, you can sleep good at night on a bed that is currently on top of a pile of gold.
What's the best advice you ever got as far as investing is concerned?
Oh, geez. Yeah. Probably just along the same of that, of just, don't lose. My dad's probably my biggest mentor when it comes to investing. And it kind of sucks to always be like, yeah, you're right, from your parents, even though you're like, I thought I was done with this at 18. It's 20 years later. You're still right about these things. So yeah, listen to people who have more experience and who know more in that regards, but take it with a grain of salt, trust, but verify. And then figure out how that jives with you, because some of that style you might not be ready for high volatility stuff, or after 3 or 5 years you're like, man, this collecting a premium doing the wheel is great and all, but I want to get more than 24% return over here, even though that's insane. Most people don't even like think of the metrics if they see other people bragging about 88 on their channel for like, I'm getting this year over year, whatever. It just gives people bad setup for what they really should be doing, and then they get upset. They should be getting bigger returns, take more risk, and do foolish things with their portfolios, blowing them up.
Oh, so just
that.
talking about how much income you get every single month, from these high yield ETFs is probably not. No, I'm just kidding. Last question. What has been your best investment so far? All right, and this is a broad question. I'm opening it up. It doesn't have to be a ticker. It could be anything. What has been your best investment so far?
I really don't know. I think I probably have to go back on spending more time on myself. Screw the market, because that's not going to determine all of, when I put that information in of who I am as an investor, that doesn't go away. Unless I end up getting Alzheimer's or something, that's going to stick around for the most part. And that will carry forward. Whereas those gains, they might be gone tomorrow. On the line, know what you own, know what kind of investor you are, and if you want to go risk on real stuff, study the people who do it well. Don't just YOLO into hey, is this make a lot of money? Well, yeah, but you're also putting your crotch on the chopping block. Are you sure you want to do that? And people are like, yeah, sure, it'll make a ton of money, but
awesome.
There's the other side of it too, where you end up getting your ass handed to you.
Yep, that's a fact. All right. Well, hey, man, I appreciate your time and sharing kind of your own insights, your perspectives with us, with me, with the audience. So with that being said, hope you guys enjoyed the episode. Let me know down below in the comment section if you're investing in any gold, whether a cover call ETF, GLD as a regular ETF, or maybe you're actually holding physical gold so you can barter with it and buy a cheeseburger. All right. So with that being said, guys, we'll see you in the next episode. Take care. The Victor Crooks, thanks for joining.
Thanks for having me.